We're going to look at what a tax invoice is. You can see there's a list of all the documents that we're going to study in Chapter 3. So we've got 2 documents for cash transactions, a couple of documents for credit, and then a bunch of other documents. So which ones are tax invoices? Well, looking at that list, we can see only the documents for credit transactions have the word invoice in them. So are they the only ones that are tax invoices? Or what we're going to learn is that's actually not true. So looking at GST for a second, going back to Chapter 2, remember that every time the business collects or charges GST, that goes into our liability and makes that liability increase. But the business gets to offset that by claiming all the GST that we've been paid or been charged, and that will reduce our GST liability. So what we've got to do is report this to the Australian Taxation Office, the ATO, and what they're going to ask for is all the documents that prove the amount of GST that you've paid and received. They're called tax invoices. So just the basic definition is a tax invoice is any business document between 2 parties that provides evidence of a transaction including GST. So at the end of the period, we'll send all our documents up to the tax office, and they're called tax invoices. So based on that definition, any document that provides evidence of GST, it's actually going to be all 4 of those documents, both cash receipts and check butts, and also sales invoices and purchase invoices. Whilst some of those are for cash transactions and some are for credit, the point is they're providing evidence of GST, so all 4 will actually be classified as tax invoices. Why is it a tax invoice? I guess looking at it, you can see it has the words tax invoice on it, just underneath the receipt number up here. And it doesn't necessarily mean that's a credit transaction though. So in this case, we can see it's actually a receipt number, so therefore it must be a cash transaction. But the point is, it's also a tax invoice. Why? Because it has GST in the transaction, and it's going to provide evidence of GST that we'll send to the tax office.